So if any assets have decreased, you will record in the debit side. In the same way, if any liability have increased, you will record in the debit side. Outstanding expenses is always a liability. Then the reverse of outstanding expenses is what? Outstanding income. So outstanding income should be asset. So outstanding income. We are going to treat the goodwill according to Accounting Standard 26. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. Today we are in the fourth session of chapter 3, that is from part A, admission of a partner. So my dear students, we have already discussed about admission of a partner, and we also learned how to calculate new profit sharing ratio as well as sacrifice ratio during admission of a partner. So what do you mean by admission of a partner? When a new person enters into a existing partnership firm, is called as admission of a partner. Of course, the new profit sharing ratio changes because when a person enters into a partnership firm, so here the old partners are going to sacrifice their share of profit. So for that reason, we have to calculate new profit sharing ratio, and we have already discussed about it. In today's session, we shall continue with what are the accounts, what are the final accounts as well as statement that has to be prepared during admission of a partner. Let us see what are the accounts that has to be prepared. So here we have to prepare two accounts. So one is revaluation account, and the second accounts to be prepared is partners capital account. And balance sheet at the end or on the date of admission of a new partner. So this is a statement. So this is not an account. So it is a statement. So you all know balance sheet is a statement, right? So these are the two accounts that has to be prepared during admission of a new partner, that is revaluation account, and the second account is partners capital account, and at the end we will prepare the balance sheet, that is on the date of admission of a new partner. Now why we have to prepare this revaluation account? We shall see one by one. What do you mean by revaluation account? Then what is the format of revaluation account? Now if you see the meaning of revaluation account here, so before this explanation, let me give an example here. Suppose there are two partners A and B. So A and B, so these are the two partners, and they were undertaking their business activity. Now they want to expand their business. So what they will do? They will take a new partner into the partnership firm. Now the new partner, let us assume C. Now A and B were undertaking their business activity from past 10 years. So they were undertaking their business activity from past 10 years. So of course they would be having certain assets and liability in the partnership firm, that is partnership firm of A and B. Now after 10 years, a new partner has been appointed. Now, do you think the value of assets and liability of that partnership firm which was purchased before 10 years will be same when a new partner enters into a partnership firm? No. There may be a chances. So, there may be a fluctuation in the price of assets as well as liability. That is, the value of assets and liability will differ. So, as the time passes, of course, we know what do you mean by depreciation? That is, decrease in the value of asset. So, in the same way, as the time passes, there is a chances that the value of assets and liability might have increased or decreased. So, in order to know the current value of assets and liability on the date of admission of a new partner, we are going to prepare the revaluation account. So, as I have already told you, this assets and liability or the value of assets and liability keeps on changing. So, that is before 10 years, the value of assets and liability might be different. Now, after 10 years, of course, there will be variation in the value of assets and liability. So, in order to know what is the current value of assets and liability on the date of admission of a new partner, we are going to prepare this revaluation account. Now, let us see what is the meaning of revaluation account. Revaluation account is an account prepared in order to record increase or decrease in the value of assets and liability. So here we are going to mainly consider this assets and liability, and we have to ascertain to what extent it has increased and to what extent it has decreased. So here we are going to or mainly consider the increase or decrease in the value of assets and liability. That is, on the date of admission of a new partner, we have to know what is the value of assets and liability of the partnership firm. So in order to record that, so this revaluation account is prepared. So what do you mean by revaluation account? So here the word itself tells that revalue, in the sense again they are going to value. Value what? The value of assets and liability. So this account is prepared in order to record increase or decrease in the value of assets and liability, in the sense to what extent it has increased and to what extent it has decreased. So it is usually prepared at the time of admission, retirement and death of a partner. So when we are going to prepare this revaluation account? During admission, retirement as well as death of a partner. So this was an example which was relating to admission of a partner. In the same way, when a person retires from the partnership firm, for example, there are three partners, A, B and C. Now B is going to retire. Now, these A, B and C, all the three partners who are undertaking their business activity from past 5 years. Past 5 years. Now, a person is going to retire. So, the partnership firm has to give some amount to that retiring partner, right? For that reason, they have to know what is the current value of assets and liability, and after valuing the assets and liabilities, so the difference will be either profit or loss, and that has to be distributed to the retiring partner also. So that is in case of retirement. In the same way, death also. So if a person dies in a existing partnership firm, so the amount that has to be given to the deceased partner, the person who have died. So in order to ascertain that, we have to prepare this revaluation account in order to know increase or decrease in the value of assets and liability of a partner, ascertain to profit or loss on revaluation of assets and liability. So in revaluation account, what you have to remember, we are going to record to what extent the value of assets and liability have increased or decreased, and the difference amount will be either profit or loss on revaluation, which has to be distributed among the partners in their profit sharing ratio. So this is about revaluation account. Now let us see what is the format of revaluation account. Very easy format, and my dear students, this is a very important 12 marks question in your examination. That is, preparation of partner's capital account or preparation of final accounts during the admission of a partner is a very important 12 marks question. Now if you see the format here, so it will be having debit as well as credit side, and always make sure that, as I told you, the presentation of your answer is very important. So how do you write here? So write the heading revaluation account. Write the heading revaluation account. So it will be having debit and credit side. So for easy remembrance, or I'll give a clue here, in order to record in your debit side, just remember A minus L plus. A minus L plus in the debit side, and coming to the credit side, A plus L minus. So if you just remember these two clues, so it's very easy to record all the items in your revaluation account. Now what do you mean by A minus L plus? So as I told you, you are going to record to what extent the value of assets and liability have increased or decreased. That you will record in your revaluation account, right? Now what do you mean by A minus? So if any assets have decreased, you will record in the debit side. In the same way, if any liability have increased, you will record in the debit side. Coming to the credit side here, it's reverse. A plus, in the sense, if any assets have increased, in the same way, L minus, if any liability have decreased, you are going to record in the credit side. Hope you are clear with this clue. So what you are going to record in your debit side? A minus L plus. In the same way, credit side, A plus L minus. Now, as I told you, A minus, in the sense decrease in assets. So if any asset value have decreased, you will record in the debit side. In the same way, L plus, increase in liabilities. So we'll record So whichever the asset have decreased, you will record that asset, you will record the value to what extent it has decreased. So you will write the amount here. To what extent it has decreased. In the same way, increase in liability. So if any liability have increased, you will record that liability and you will record the amount. In the same way, if there is any unrecorded liability. Now what do you mean by unrecorded liability? For example, in the balance sheet, there is no liability. So they have not given a particular liability. For example, outstanding expenses. So outstanding expenses is a liability, right? But in the adjustment, they have given the liability. In the sense, in the old balance sheet, there is no liability. But when a partner enters into a partnership firm, so there is a new liability. So such type of liability is called as unrecorded liability. So if you find any unrecorded liability, you have to record in the debit side. It's nothing but liability increases, L plus, a new liability have entered into a business organization or the partnership firm. So, unrecorded liability, you will record in the debit side. In the same way, coming to the credit side. So, these are the three items you have to record in the debit side. So, which are the items? A minus, that is if any assets have decreased. L plus, if any liability have increased. In the same way, unrecorded liability have to be recorded in the debit side. Now, coming to the credit side. So here, as I told you, A plus L minus. So if any assets have increased, so how do you record? By increase in asset, or for example, if machinery have, or the value of machinery have increased. So how do you record? By machinery account. To what extent it has increased, that amount you will write here. Next, by decrease in liability. So if any liability have decreased, you will record in the credit side. Then unrecorded asset. Unrecorded liability you will record in the debit side. In the same way, unrecorded asset. So unrecorded asset in the sense what? A new asset have been entered into a partnership firm. So here the total asset increases, right? So A plus. So by unrecorded asset. Now these are the 6 items what you have to record in your revaluation account. After that, you have to balance both the sides. Suppose if the debit side is more. For example, if the debit side is 20,000 and suppose if the credit side is just 10,000. That is, the total of credit side is 10,000. So, it means what? If the debit side is more than credit side, so it is loss. So, how do you record? By partner's capital account. So, you will transfer that loss to partner's capital account in their profit sharing ratio. So, by partner's capital account, loss transferred to old partner's capital account. So, for example, A and B are old partners and they are sharing their profit and loss in the ratio 1:1. So, you will distribute that loss. You will get a loss here. That is the balancing figure. You will distribute that loss to the old partners in their profit sharing ratio. You will understand better when we solve a problem. Okay. Now, suppose if the debit side is more than credit side, as I told you, it means what? Revaluation loss. In the same way, suppose if the credit side is more than debit side, so it means what? Revaluation profit. So, that profit has to be transferred to partner's capital account. In which ratio? In the old profit sharing ratio. So, how do you record? To partners capital account, profit transferred to partners in their old profit sharing ratio. And my dear students, remember you will not get profit and loss together. So, it will be either profit or loss. Okay. So, this is about your revaluation account format. Now, we shall go through a problem. So, we shall discuss about partner's capital account when we solve a problem. In the same way, balance sheet later. Now, we shall solve a problem so that you can clearly understand how we have to prepare final accounts during admission of a partner. And my dear students, please remember, so this is a very important 12 marks question. Okay, so I have already told you, it's an option here. So, if they ask 12 marks from admission, you will not get a 12 marks from retirement. Suppose if they have not asked 12 marks from admission, so they will ask 12 marks from the retirement chapter. My dear students, make sure that you will learn both the chapter admission as well as retirement, because for 12 marks it is very important. As I told you, it is an alternative question. So make sure that if you learn the admission chapter, it's very easy to solve the retirement problem. Okay, now go through the problem here. Go through carefully. The following is a balance sheet of Raga and Tala who share profit and loss in the ratio 2:1. Now they have given, so who are the partners? Raga and Tala. Then what they have given? Their profit sharing ratio, that is 2:1. Now how do we write 2:1 in the form of fraction? That is Raga's share is 2/3 and Tala's share is 1/3. So how do we record? 2, write 2 here, 2 plus 1, 3. In the same way 1, 2 plus 1, 3. So this is their profit sharing ratio, that is 2:1, that is 2/3 and 1/3. So now we know the partners Raga and Tala, we know their profit sharing ratio 2:1. And they have given the balance sheet, that is before the admission of a new partner, they have given the balance sheet. Now go through the balance sheet here. We are having certain items under assets as well as liability. Now if you see the liability side, we are having creditors 78,800, then loan, how much? 43,000, general reserve 42,000, and we are also having profit and loss account 18,000. Then they have given the capital of old partners. So who are the old partners here? Raga and Tala. So Raga's capital is 1,20,000 and Tala is 80,000. So they have total and they have written in the outer column 2 lakh. Now coming to the asset side. So we are having certain items here also. Cash at bank 19,800, debtors they have given 22,000, stock 60,000, machinery 70,000 and land and building 2,10,000. So this is a balance sheet that is before the admission of a new partner. Now go through the adjustment, and my dear students, make sure that all these adjustment has to come twice in your solution. Okay, so remember, so it may be in revaluation account or it may be in partner's capital account or it may be in the balance sheet, but it should come twice in your solution. Now a new partner, that is Shruti. Now who is a new partner here? Shruti is admitted into partnership on 1st April 2017. Now who is a new partner? So old partners are Raga and Tala and Shruti is a new partner on the following terms. Let us see what are the terms they have given about the admission of a new partner. She has to bring 80,000 as capital and 42,000 as goodwill. Now I have already told you in your previous session, when a new partner enters into a partnership firm, he or she has to bring capital. Other than the capital, they will bring some extra amount which is called as goodwill or premium for goodwill. Now in this problem, if you see, Shruti is a new partner. She has bought 80,000 as capital. So during her admission into the partnership firm, she has bought 80,000 as capital and 42,000 as goodwill. So this is the first adjustment, that is relating to capital as well as goodwill. Now coming to the second adjustment, a reserve of 6% is to be created on debtors. Now what do you mean by reserve? So reserve is always a liability. So remember, so whatever which is deducted from debtors, now reserve has to be deducted from debtors. So if you have seen earlier in the balance sheet, what we'll do, we will deduct this reserve, right? It may be RBD, that is reserve for bad debts, or PBD, provision for bad debts, PDD, provision for doubtful debts, or simply bad debts. So these are the items which has to be deducted from debtors. Now here they have given a reserve of 6% is to be created on debtors. But if you see the balance sheet in the question, so whether they have deducted from debtors, so debtors is 22,000, but they have not deducted that reserve, right? In the sense what? In the balance sheet, in the earlier balance sheet, it was not there, but in the adjustment, they have given that reserve. It means during the admission of a partner, a reserve has been created on debtors. So as I told you, whatever which is deducted from debtors, it is considered as liability. Of course, debtors is an asset, but the thing or the item which is deducted from debtors is liability. Now, a new liability have arisen into the partnership firm, which is that liability, that is reserve. That is reserve of 6% is to be created on debtors. So, debtors is how much? 22,000. So, we have to calculate 6% reserve. 6 divided by 100. Okay. Next, coming to the next one. Machinery is to be depreciated by 5% and stock by 4%. Now, depreciation means what? Decrease in the value of asset, right? So here machinery is an asset. So it has been, or the value of machinery has been decreased by 5%. So we have to calculate depreciation on machinery. Now how to calculate? If you see the value of machinery 70,000. So 70,000 into 5%. So depreciation on machinery is 70,000 into 5 divided by 100. In the same way, stock they have given 4%. Now what is the value of stock in the balance sheet? Stock is 60,000. So 60,000 into 4%. 60,000 into 4 divided by 100. Next, what they have given? Land and building appreciated by 10%. So land and building they have, or the appreciation means what? Increase in the value of asset. So land and building is an asset. So what is the value? That is 2,10,000. It has been appreciated by 10%. So 2,10,000 into 10 divided by 100. So we have to calculate. Next, outstanding audit fees. Now what do you mean by audit fees? So it's a expense. Now always, my dear students, you will get confused with this item. So that is outstanding income, outstanding expenses, prepaid income and prepaid expenses. And make sure that in your question they will ask any one of these type of items. For easy to remember, I'll show you how you have to remember. Okay, now you know the balance sheet. So here you will record all the liabilities, whereas here you will record all the assets. So always remember one item, that is outstanding expenses. So outstanding expenses is always a liability. Then the reverse of outstanding expenses is what? Outstanding income. So outstanding income should be asset. So outstanding income. In the same way, reverse of this, outstanding expenses, prepaid income. So prepaid income is liability. So prepaid income. Then reverse of this will be asset. That is prepaid expenses. So remember this one point. So if you remember this outstanding expenses, so always think that outstanding expense is a liability. Reverse of that outstanding expense is what? Outstanding income. So it should be asset. In the same way, reverse of expense here, that is prepaid income will be liability and prepaid expenses will be asset. So if you remember this 4 items, so it's very easy to solve the problem. Now outstanding audit fees. So I have already told you audit fees is an expense. Okay, so simply they have given just a item, so it means what? It is a expense. Now audit fees is a expense. Outstanding audit fees, outstanding expenses, so it's a liability. So if you see the balance sheet, in the liability side they have not given the outstanding audit fees. In the sense, earlier it was not there, but during the admission of a new partner it has arisen into the business. In the sense what? Increase in liability. Now we are done with all these adjustments. Hope you have understood the adjustment. Now we shall see where this adjustment will come in your solution. What they have asked, prepare necessary ledger accounts and balance sheet of the new firm. So what are the ledger accounts to be prepared? So which are the 2 ledger accounts we have to prepare? So the first one is revaluation account. Revaluation account. And the next one is partners capital account. Partners capital account. And they have asked us to prepare the balance sheet. So this much we have to prepare in a solution. Now if you see your revaluation account, so what do we record? Increase or decrease in the value of assets and liability. Now leave the first adjustment, so it's relating to the capital as well as goodwill. So it comes under partners capital account. So where it comes? So once it comes under partners capital account, and once it has to be recorded in the balance sheet. Okay, so 2 times it will occur. Next, increase or decrease in the value of assets and liability. Now here from adjustment 2 to last adjustment. So it's relating to increase or decrease in the value of assets and liability. So where it comes? So it comes under revaluation account once, because in revaluation account we are going to record increase or decrease in the value of assets and liability, right? and once it comes under balance sheet, I'll show how we have to record in the balance sheet. Hope you are clear with all the adjustment. Now we shall directly go through the solution. Now, which is the first account to be prepared? As I told you, revaluation account. So, write the heading revaluation account. Already we know the format. So, what we are going to record in the debit side? A minus L plus. So, first, when you solve the problem, record this first or else you will get confused. Okay. So, A minus L plus. Coming to the credit side, what is A plus L minus? Now we shall see the adjustment one by one and we shall record the items here. So first, once you prepare the format of revaluation account, write revaluation account heading, write debit as well as credit. And my dear students, most of you will forget to write this debit as well as credit. But make sure that you will record this properly. As I told you, the presentation of your answer is very important. So make sure that you will write the debit and credit also. Now, in our debit side, write A minus L plus, credit side A plus L minus. Okay. Now, we shall go through one by one adjustments. Now, as I told you, leave the first adjustment. It comes under partner's capital account. A reserve of 6% is to be created on debtors. I have already told you. Since they have not given reserve in the balance sheet, but now they are asking us to create a reserve of 6% on debtors. So, as I told you, reserve is what? It's a liability. So, increase in liability. Where do we record? So, where do we record in the revaluation account? That is in the debit side, to reserve on debtors. Okay, to reserve on debtors. Now, what is the value of debtors? So, that is 22,000. So, value of debtors is how much? 22,000. What is the percentage of reserve to be created? That is 6%. So, 22,000 into 6 divided by 100. So, 22,000 into 6 divided by 100. So, you'll get 1,320. Hope you are clear with the first adjustment. Okay. So, why we are going to record in the debit side? Reserve is a liability. L plus, that is increase in liability. Where do we record? In the debit side. So, how to record? To reserve on debtors. So, debtors, they have given 22,000. They have given the percentage in the adjustment 6% into 6 divided by 100. So, I'll get 1,320. Now, come to the next one. Machinery is to be depreciated by 5%. In the sense, decrease in asset. Right? So, what is the value of machinery? So, we have already seen it. Right? That is 70,000. 70,000 into 5 divided by 100. So, decrease in the value of machinery. So, where do we record? A minus. Right? So, in the debit side itself, to machinery account. So, the value of machinery in the balance sheet is 70,000. What is the percentage they have asked us to calculate? 5%. So, 70,000 into 5 divided by 100. So, we'll get 3,500. Now, coming to the next one. And stock by 4%. So, here depreciation on stock also has to be created. So, what is the value of stock in the balance sheet? We have already seen it. That is 60,000 into 4 divided by 100. Now, depreciation in the sense what? Decrease in the value of stock. Stock is an asset. So, where do we record? In the debit side. That is A minus. So, to stock account, 60,000 is the value of stock into 4%. 4 divided by 100. So, I'll get 2,400. Now, coming to the next one, land and building appreciated by 10%. So, in the sense what? Increase in the value of asset. So, where do we record increase in the value of asset? That is in the credit side. So, buy land and building. Now, what is the value of building in the balance sheet? 2,10,000. What is the percentage to be appreciated? That is 10%. So, 2,10,000 into 10%. 2,10,000 into 10 divided by 100. So, I'll get 21,000. So, this is what? Increase in land and building. In the same way, go to the next one, outstanding audit fees. So, I have already told you. So, we have identified outstanding audit fees is what? It's a liability. So, outstanding audit fees is an expense. So, outstanding expense is what? It's a liability. Since they have not given in the balance sheet, but a new liability have been created during admission of a new partner, in the sense what? Liability have increased. So, that is nothing but unrecorded liability. So, where do we record unrecorded liability? In the debit side of revaluation account, how much? 1000. So 2 outstanding audit fees 1000. Now what you have to do? We have to balance both the side, and the balancing figure will be either profit or loss on revaluation account. Now if you add all the items in the debit side, so you'll get the total 8,220. That is 1,320 plus 3,500 plus 2,400 plus 1,000. So you'll get 8,220. But coming to the credit side, so we are having only one item, so the total is 21,000. Now which one is greater? 21,000. Write 21,000 both the side minus 8,220. So you'll get a balancing figure of 12,780. Now what is this 12,780? So your credit side was more than debit side. So credit side was 21,000, whereas debit side was only 8,220. In the sense credit side is more than debit side, you got a balancing figure in the debit side. It means what? It is revaluation profit. Now that profit has to be distributed only to the old partners in their old profit sharing ratio. Now how to write? To profit transferred to partners capital account. Now who are the old partners? Raga and Tala. Shruti is a new partner. No need to distribute to Shruti because she was not part of the old partnership firm, right? Now, just now she has entered into a partnership firm, so no need to distribute that revaluation profit to the new partner. So, transfer only to the old partner. So, old partners are Raga and Tala. What is the profit? 12,780. Now, distribute that 12,780. That is the balancing figure in their profit sharing ratio. Now, what is their profit sharing ratio? That is 2:1. So, distribute this 12,780 to these two partners, that is old partners. So 12,780 into 2 by 3, so you'll get 8,520. In the same way, 12,780 into 1 divided by 3, you'll get 4,260. So this is about revaluation account. Hope you have understood this account. Now moving on to the next account, that is partners capital account. Now, as I have not shown you the format, now let us directly solve the problem. Let us directly prepare the partners capital account. I'll go step by step. So, please remember, if you follow the step-by-step procedure, you will not forget any of the items. Okay. Now, write a neat heading, partners capital account. So, you'll be having both sides, that is debit side as well as credit side. Now, let us see how we have to begin this partners capital account. So the first item you have to remember is you have to bring the capital of old partners. Capital of old partners. So bring the capital of old partners. Now old partners are Raga and Tala. Now what is the format here? So you'll be having debit and credit side. Under debit side particulars, and you have to draw column for each partner including new partner. Now who are the partners? Now Raga, Tala and Shruti. In the same way credit side also particulars Raga, Tala and Shruti. Now, the first thing is that you have to bring the capital of old partners. Now, where do we get the capital of old partners? In your balance sheet, that is in the question. Now, go through the question here. So, they have given capital of Raga and Tala. How much? 1,20,000 and 80,000. Now, transfer this capital to partners capital account as by balance brought down. So, how to record? By balance brought down. So, what it is? Capital. Capital of whom? Only the old partners. That is 1,20,000 and 80,000. No need to record in the new partners column. So, we have to bring the balance which is given in the balance sheet. So, how to record? By balance brought down 1,20,000 as well as 80,000. Your second step is that you will transfer the revaluation account balance. So, you have to transfer revaluation account balance. So, we had already prepared revaluation account, right? So, what is the balance of revaluation account? It was profit. Revaluation account profit, and we had distributed to the old partners. So, what is the profit of each partner? 8,520 and 4,260. Now, transfer that to partners capital account. So, how do you record? By revaluation account. So, what it is? It is profit. Suppose it is loss. Then how do you record? To revaluation account, that is in the debit side. So here you will record to revaluation account, but in this problem it is profit. So record it as by revaluation account, that is profit. So what is the profit? 8,520 and 4,260. Okay. Next, what you have to do, you have to check your balance sheet whether there is any reserve, fund as well as profit and loss account. So your third step is that you have to check whether there is any reserve, fund as well as profit and loss account. Now go through your balance sheet, that is in the question. See whether there is any reserve, fund as well as profit and loss account in your balance sheet. If you see the liability side, we are having creditors loan and here there is general reserve and of course there is profit and loss account. Now come to the asset side. So here most of the time reserve, fund as well as profit and loss account will be in the liability side. But make sure that you will see both the side because sometimes profit and loss account will be in the asset side also. So if it is there in the asset side, it means what? It is loss. Okay. So we have to see the whole balance sheet whether there is any reserve, fund as well as profit and loss account. So in this problem, if you see the liability side, we are having general reserve and profit and loss account. Now what you have to do, we have to transfer this into partners capital account and distribute that amount. Now here reserve amount is 42,000. In the same way profit and loss account amount is 18,000. So we have to distribute this 42,000 that is reserve to the old partners in the old profit sharing ratio. In the same way profit and loss account 18,000 into old partners ratio. That is, we will distribute only to the old partners. The reason is that because these reserve as well as profit and loss account is created or belongs to only the old partners, not to the new partner. So we will distribute only to the old partners in their old profit sharing ratio. Now go through the solution here. So how do we record? By general reserve. Since it was there in the liability side, transfer to the credit side of partners capital account. By general reserve, what was the general reserve? 42,000. What is the old profit sharing ratio? 2:1. They had already given in the question 2:1. So each partner will get 28,000 as well as 14,000. In the same way, transfer profit and loss account also. So profit and loss account is 18,000 into 2:1. That is their profit sharing ratio. That is old profit sharing ratio. So you will distribute this reserve and profit and loss account to old partners in the old profit sharing ratio. So when you distribute, each partner will get 12,000 as well as 6,000. Now how to distribute? That is, if you see this profit and loss account 18,000 into 2:1, right? So 2/3. In the same way 18,000 into 1/3. So I'll get the amount here. That is 12,000 and 6,000. So in this way you are going to distribute that. So we got 12,000 as well as 6,000. Next, your fourth step is what? Now we are done with all the partners, that is the entries relating to old partner. Now record the entries of new partner. So now a new partner has entered into a partnership firm. Who is the new partner? Shruti, right? So she has bought capital as well as goodwill during the admission of a partner, right? Now see, if you see the adjustment here, she has to bring 80,000 as capital and 42,000 as goodwill. Now we have to record this. I have already told you it comes under partners capital account. Now we have to record it. So how to record? So if you see the asset side of the balance sheet, what they have given? Cash at bank. In the sense, whenever we are going to use cash or bank, so we will use the word bank. Why? Because they have given cash at bank. Suppose they have given just cash, then we will use the cash account. Suppose they have given cash in hand, then we will use cash account. Suppose they have given both cash in hand and cash at bank. In that situation, we will use bank account. Okay. Now, in this problem, they have given cash at bank. So, we shall take it as by bank account. For what? For the amount which is bought by the new partner in the form of capital as well as goodwill. So, how to record? By bank account. Now, write by bank account, add both capital as well as goodwill. So, how much capital she has bought? That is 80,000. Then 42,000 as goodwill. So, add both capital and goodwill and write in new partners column. So, new partner is Shruti. So, Shruti's column 1,22,000. So, how do we record? By bank account, 80,000 is the capital of new partner and 42,000 is a goodwill which is bought by the new partner. So, total it and write in the Shruti's column, that is new partners column. Now we have to treat the goodwill as per accounting standard 26. Okay, so we are going to treat the goodwill according to accounting standard 26. Now in that situation, what you have to do, so your entry will be, that is new partners capital account, new partners capital account to old partners capital account, old partners capital account. So this is the entry. Now what you have to do here, whatever the amount which is bought by the new partner. Now here new partner has bought rupees 42,000 as goodwill. So whatever the amount which is bought by the new partner as goodwill. So here 42,000 is bought in the form of goodwill, has to be distributed in sacrifice ratio. Okay, it has to be distributed among the partners, that is old partners, in their sacrifice ratio. So this is an entry in relation to treatment of goodwill according to accounting standard 26. Now who is the new partner? So the entry was new partners capital account data to old partners capital account. Now new partner by Shruti's capital account. New partner is Shruti by Shruti's capital account. What is the amount of goodwill which is bought by Shruti? 42,000. What is their sacrifice ratio? So here in this problem they have given old ratio, that is 2:1. Okay, but they have not given sacrifice ratio. So we already know how to calculate sacrifice ratio. We need both old ratio as well as new ratio. But in this problem, they have not given new ratio. So old ratio itself is considered as sacrifice ratio. Hope you are clear with this. No need to calculate sacrifice ratio once again because we don't have sufficient information to calculate the sacrifice ratio. We want new ratio to calculate the sacrifice ratio, but they have not given in the question. So old ratio itself is treated as sacrifice ratio. Now the goodwill which is bought by the new partner is 42,000 and the sacrifice ratio is old ratio itself, that is 2:1. Now where you have to, and we have to divide that 42,000. So 42,000 into 2/3, so we'll get 28,000. In the same way, 42,000 into 1 divided by 3 will get 14,000. But you will not write the amount in new partners column because we have to distribute among the old partners, right, in their respective column. Now the other half of the entry is what? New partner we have already recorded by Shruti's capital account. Two old partners capital account. Who are the old partners? Raga's capital account and two Tala's capital account. You will write the amount in Shruti's column, that is new partners column. Now Shruti is how much? How much amount to be given? 28,000 because new partner have bought that amount in order to distribute to the old partners. Now Shruti is giving 28,000 to Raga as well as for Tala 14,000 is given by Shruti in the form of goodwill. So this is about goodwill treatment as per accounting standard 26. Now what you have to do, we have to balance both the side and the balancing figure has to be carried down from partner's capital account because the business is going to continue, right? So this amount, the balancing figure will be recorded in the balance sheet. So we have to carry down that amount. Now how to calculate? So if you calculate the amount of Raga, so here Raga's amount in the debit side is 0. But when compared to credit side, the total of Raga is how much? 1,96,520. Okay, so that is the total of credit side of Raga. Now 1,96,520 is greater, right? 1,96,520 both the side minus 0. So the balancing figure is 1,96,520. Now what you are going to do with this? So we have to carry down that amount. So this is what? This is the balancing figure. In the same way, come to Tala. So here the debit side is what? It's only 0. Whereas coming to the credit side, so the total of credit side is 1,18,260. That is, if you add all these 80,000, 4,260, 14,000, 6,000, 14,000, so I'll get 1,18,260. Whereas in the debit side it is 0. So write 1,18,260 both the side minus 0. So I'll get a balancing figure of 1,18,260. In the same way for Shruti. So here 28,000 plus 14,000. So it's 40,000 in the debit side. Okay, 2 items. Whereas coming to credit side, here it is 1,22,000. So here in the credit side, it is 1,22,000. So 1,22,000 is greater. Write 1,22,000 both the side minus 40,000. So we'll get a balancing figure of 80,000. Now all these amount, the balancing figure has to be carried down to the balance sheet. Now whatever the amount you have carried down, bring down that balance. By balance brought down same amount, that is 1,96,520, 1,18,260 as well as 80,000. Whatever the amount you have carried down, you have to bring down that balance. So this is about partners capital account. So what you have to remember here, first bring the capital of old partners. Next, transfer the revaluation account balance. Next, check whether there is any reserve, fund as well as profit and loss account. So if you find any such kind of items, transfer that to old partners capital account in their old profit sharing ratio. Next, we have to record the new partners capital as well as goodwill. So we have to add both capital and goodwill and write in new partners column. Then treatment of goodwill as per accounting standard 26. So your entry will be new partners capital account data to old partners capital account. So you will distribute that goodwill which is bought by the new partner in their sacrifice ratio. Suppose they have not given sacrifice ratio, then old ratio itself is considered as sacrifice ratio. Then you will balance both the side and the balancing figure has to be carried down. So this is about partners capital account. Now we shall go through one more account, that is bank account. So it's not compulsory that you have to prepare the bank account. So it's a optional here. But we shall prepare the bank account. So here the format is under debit side particulars amount, under credit side particulars and amount. And make sure that don't forget to write this debit as well as credit. Now how to begin your bank account? First, in the balance sheet, so if you see the balance sheet in the asset side, they have given cash at bank. So we have to bring that balance to bank account. Now go through the balance sheet here. So they have given cash at bank 19,800. So we have to record in bank account as to balance brought down. So how to record? To balance brought down 19,800. Next, see your partners capital account. We have transferred some amount to bank account, right? So which is that amount? That is transfer of capital as well as goodwill, right, to new partners capital account. So how did we transfer? By bank account. So what was the entry? Bank account data to Shruti's capital account, right? That is bank account data to new partners capital account. So record that in your bank account. That is bank account data to Shruti's capital account. So to Shruti's capital account, so what is the amount? So the amount is 1,22,000. That is total of capital and goodwill. Then no other items to be recorded in the bank account. So what you have to do, as usual, we have to balance both the side and the balancing figure has to be carried down. Now 19,800 plus 1,22,000. So we'll get the total of 1,41,800. But when compared to credit side, it is less. So it is just 0. Right, so whole amount of 1,41,800 has to be carried down. So how do we record? By balance carried down 1,41,800. And whatever the amount you have carried down, you have to bring down that balance at the beginning of next month. So to balance brought down same amount, what you have carried down here, same amount has to be brought down. It is 1,41,800. So this is about bank account. Now we shall go through the last statement that has to be prepared is balance sheet. Now balance sheet is prepared on the date of admission. So it has to be prepared on date of admission of a partner. So now when a partner is being appointed or admitted, that is on 1/4/2017. If you see the adjustment here, Shruti is admitted into partnership on 1st April 2017. So on this date, we have to prepare the balance sheet. That is 1/4/2017. 1/4/2017. Now in order to prepare your balance sheet, so you have to refer the old balance sheet which is given in the question. Okay. First we shall record the asset side. Now we shall go through what are the items which are there in the asset side of the balance sheet. Cash at bank 19,800. So here for this what we have to add, because when a new partner entered, she bought capital as well as goodwill. So we have to add that capital as well as goodwill, because when she brings capital as well as goodwill in the form of cash, of course the cash of the organization increases, right? So we have to add that. So cash at bank 19,800, cash at bank 19,800 which was there in the balance sheet, plus 80,000 which is the capital, plus 42,000 is the goodwill which is bought by the new partner. Or if you prepare the bank account directly, whatever the amount you have carried down, so that amount will be the bank balance. Okay, so here it is how much? 1,41,800. So same will be there. So if you calculate like this also, you'll get the same amount. Or if you prepare the bank account also, the balancing figure will be the balance of bank account. So what you have to remember here, so you'll take the amount which is there in the balance sheet, plus capital which is bought by the new partner, plus the goodwill which is bought by the new partner. Now let us go to the second item. So second item is debtors, but there is a provision for debtors at 6%, right? So we have to deduct that provision. So we have already recorded in the revaluation account provision. So how much it was? 1,320. So it has to be deducted from debtors. So let us see how we have recorded. So debtors 22,000 which was there in the balance sheet, less 6% reserve, right, or provision. So when you calculated, we got 1,320, that is 20,680. Now coming to the next one, we have stock 60,000, but there is a depreciation. So we had already, once we have already recorded in revaluation account. So what was the depreciation of stock? That is, stock is how much? 4%. It's nothing but 2,400. So we have to record in the balance sheet. So we have to deduct the depreciation. So stock 60,000 less depreciation 4%. That is 60,000 into 4 divided by 100. So we had already calculated, that is 2,400. Now 60,000 minus 2,400. So I'll get 57,600. In the same way, the next item is machinery 70,000. There also there is a depreciation. Depreciation on machinery is how much? 5%. So we had already calculated and written in the revaluation account. So machinery how much? 5%? 3,500. So depreciation has to be deducted. So 70,000 is the machinery value minus depreciation 3,500. So how much? Machinery 70,000 less depreciation 5% depreciation. So when you calculate, you will get 3,500. Deduct this and write in the outer column, that is 66,500. Now moving on to the next one. So we have land and building 2,10,000, but there is a appreciation on land and building, right, at 10%. So we have already recorded here. How much? 21,000. So we have to add that appreciation. So if there is any depreciation, we will deduct. If there is any appreciation, we will add. So appreciation means what? Increase in the value. So we have to add. So land and building 2,10,000, add appreciation 21,000. That is 10% appreciation. So the total is 2,31,000. Now coming to the liability side, let us see what are the items that has to be recorded. So see the first liability, creditors 78,800, but there is no adjustment relating to creditors. So we can write it directly 78,800. In the same way, loan 43,000. So there is no adjustment relating to loan. So we have to write the same amount. It means that it remains same during the admission of a new partner. So we shall record that two items, that is creditor 78,800, loan 43,000. Next, we shall see whether we have recorded all the items twice. Capital we have recorded in partner's capital account and we have added to cash at bank in the balance sheet. And the reserve, once we have recorded in revaluation account, next we have deducted from debtors. Machinery, so once we have recorded in the revaluation account, next we have deducted depreciation of machinery as well as stock. Land and building also, once we have recorded in revaluation account, next we have added in balance sheet. Outstanding audit fees we have recorded in revaluation account, but we have not recorded in the balance sheet. So we have to record in the balance sheet. In the sense, a new liability have come into the business, so we have to record in the liability side of the balance sheet. So outstanding audit fees. So how to record outstanding audit fees? 1000. Now we have to record the capital, reserve as well as profit and loss account, right? So we have already recorded once in partners capital account, and make sure that all these items in the balance sheet will come only once in your solution. So we had already recorded this general reserve and profit and loss account in partners capital account. Next we have to record the capital, but no need to record this capital because we had already taken this capital in partners capital account. Then which capital to be recorded? The balancing figure of partners capital account will be recorded as capital. Okay, now if you see the balancing figure of partners capital account, so we got a balancing figure here, that is Raga 1,96,520, Thala 1,18,260 as well as Shruti 80,000. So we have to record these balancing figure as capital. So how to record capital? Raga 1,96,520, Thala 1,18,260, Shruti 80,000. So this is the balancing figure of partners capital account. Total all this. Now you have to add both the side of assets as well as liability. So the total of asset and liability should be equal here. So if you add all the liability here, you'll get the amount of 5,17,580. In the same way, if you add all the assets, so you'll get 5,17,580. In the sense, the total of assets is equal to total of liability. So this is how we are going to solve a very easy 12 marks problem. So since it is a first problem, you might find it difficult, but make sure that once you go through the problem again and again, you will find it is a very easy problem. Okay, so this is a simple 12 marks problem. Make sure that, as I told you, it's an alternative question. They might ask from admission or from retirement, but both the problems are quite similar. Only few changes you have to make. So learn both the chapters. Okay, so this is for 12 marks where you have to prepare revaluation account, partners capital account as well as balance sheet. As I told you, bank account is optional. So either you can prepare or you can directly prepare the balance sheet. So my dear students, in my next session, I am going to solve a problem on admission of a partner. That is, we shall solve a 12 marks problem on admission of a partner. My dear students, hope you all understood the session. See you all in my next session with a new problem. Till then, take care. Thank you.